Hello, good afternoon, and very warm welcome to the live trading hour brought to you by the Live Trade Room. We have been just monitoring some major news event from the BOE or the MPC news event at 12 noon. So the markets are currently sort of digesting. There's been an initial reaction as far as pound weakness is concerned. So without further ado, let's get straight into it, and there's a couple of opportunities on the verge of breaking, so we'll get into them very quickly. Please see our risk warning currently up on screen. Of course, take note of the risks that are present when people trade financial markets, and it's really focusing on that exposure side to trading markets is what certainly new and inexperienced traders could really benefit from. Okay, so let's begin with just a bit of a breakdown on this latest news event. So if I just bring over Forex Factory, what you can see is at 12 noon we've had a series of news events. So we've had the asset purchase facility, so it's very much maintained at 8.95 billion. There's a little bit of dissent. So when you've got 9 votes, we've got one member of the MPC now deciding to start the tapering process. So you can see it's heavily in favour of being maintained and supporting the economy for longer. So it's I suppose basically a bit of a dovish MPC this time round, which is putting pressure on the pound. We've got the policy summary. We've also got the interest rate, which is very much expected to remain at 0.1, and the actual rates in terms of the MPC members voting as to whether the interest rate should stay as it is at 0.1, or should they be increased or decreased, or whatever the case may be. You can clearly see everyone is fully in favour of no price change. Okay, so we can regard that as relatively bearish for the British pound, and we're certainly seeing that bit of price action follow through. What is quite strange, not just the US 10-year, but bond yields generally, there's kind of a lack of reaction really to these markets. So it's a bit counterintuitive, or it's a bit strange that that's the case. Nonetheless, we kind of have to carry on regardless, really. So let's get straight into it then. We'll see what opportunities we have for you today. We're looking at some of the pound trades currently off screen. So let's get up our trading platform. Okay, so in our trade plan last night, we were anticipating, if I just get up my pen, I'll just go through the direction in which we were looking for these markets to move. Okay, so we were actually looking at this market, the euro dollar, just seeing if we're in line with the prevailing direction of this market. Sorry, you can't really see that, so let's do that again. So you can see this move is very much to the downside. We've got a little pullback for 2 or 3 days. Yesterday we got a little bit of indecision in this market. So really a breakout below that level would be very much the momentum trade. That was our sort of trade idea with a number of these markets. You can see the move to the downside. Then we get the pullback. Oops. Let me get rid of that. But what I will do is just bring this level just down a little bit. And what we were looking for is this market just continuing its momentum to the downside. But you can see that we're currently trading inside yesterday's lows. The same situation for the S&P. We're expecting markets, if they could break below the monthly low, the monthly high, then we would expect a little bit of an impulsive move lower. The problem is we do have quite strong fundamentals for stock markets. So we are actually seeing the second highest price in the S&P in history being created just recently. It just remains to be seen whether we will actually technically break above and make new all-time highs. There's an argument to suggest that we probably will at this stage. So what's important to point out when we trade is that, and I'm just looking at these markets now, we're getting close to getting some continuation on these bottom trades. So we want markets to behave as per expectations. So we're only looking to get in at certain prices. For example, below the 19.12 in the euro dollar, below the 75.36 in the Aussie dollar, and below the 42.38 in the S&P. And as you can see, on each of these markets, prices failed to act as per expectations. So what that allows us to do is to just exercise a little bit of caution, a little bit of patience. Okay, moving on to the latest news event, where we've got quite a bearish BOE looking to be supportive for longer. And what we saw initially, these are all on 15-minute price charts. We saw quite strong moves to the downside, and very simply what we wanted to do is to kind of get in on a little bit of a pullback and see if we just get that extended move to the downside on each of these markets. So further downside expected. We will of course get the inevitable pullback, which is why we've got, I suppose, a reasonably sizable stop loss. up just above this little explosive breakout trade to the downside. So if we do get a pullback, it's got to really work quite hard to take us out. But we'll see if these markets can break beneath these levels. We've got strong levels of resistance just up these higher levels, and our stop loss is just technically just above these candlesticks up here. So we've got a little bit of sideways moving price action inside this little zone, and this is on a 15-minute price chart. What I'll do is I'll change, if I just move this out of the way. So what we can see is the inverse of these selling opportunities. This is an inverted view. So we've seen the explosive move, and now we're looking for the continuation trade further to the upside. So so just to clarify, we're looking at the pound dollar to the downside once we break out of this little range, and we must bear in mind we may get a corrective move. That's all part and parcel of trading, but ultimately we do expect these markets lower from here, bearing in mind, you know, the initial reaction and also the fact that the news event was quite bearish for the British pound. So it's not a news trade as such. The other thing I want to draw your attention to is if I just take this off for just a second, bring this up. Look what's happening on the daily time frame. We've had a really strong explosive move to the downside last week, and we've just spent 3 days this week pulling back, which is what you'd expect. And now we're getting that flush trade to the downside, and we're getting in below yesterday's daily low, and that's the basic principle of the trade. So we are expecting this market to be able to squeeze down to these lower levels. Will it happen today? Maybe. Could it be tomorrow, Monday? Who knows? But we're actually trading a market on the bigger time frame, which is looking quite bearish now. So that's the other thing I just wanted to draw your attention to, and you can see that across the pound pairs, across the pound dollar and the pound yen. The same principle applies. So let me see if these fits again. Yeah, they kind of do. So so we're close to getting that flush trade to the downside. So these are trades that we're already in. Okay. So these are trades we're already in. And we'll see if we'll get that flush trade further to the downside. So there is technically, I mean, probably would, you see, we're only going to get into £2 trades, and we absolutely would prefer the pound dollar or the pound yen. For the simple reason we're in this momentum trade to downside, 3-day pullback, and now we're extending further lower. Same situation for the pound yen. We just got to be patient now. So we've had the flush trade to the downside. We had a really strong, very powerful snapback, and now we are breaking below again, below the daily low.
An update on the meeting
at which point we want to get in below yesterday's daily low and see if we get prices squeezing further to the downside.
Eastern time. I'll be 4 o'clock London time.
So now it's just a case of patience and just giving it a little bit of time to ease its way through. Comparing that and contrast that sort of image, if you keep that in your mind, against what's going on in here, which is really kind of up and down price action. It's kind of a horrible market. We've got into, I think, a couple of trades in this period, and I think we broke even on one and got stopped out for a loss on the other. So even if our direction is right, because all of our trades are to the downside and we keep getting this market grinding lower, it's just we're getting these sort of quite long sort of snapback trades and a lot of range bound price action. You don't mind a range if it fails to break through, like for example the monthly high. So we've bounced off this level four, five, six, 7 times, very close to that level, but we failed to break above it. So it's a really defined strong level of resistance. But with a lot of these, we are identifying these levels and they're just breaking above them, you know, taking out the stops and then reversing, and it's doing that on a regular basis. So we're actually in already our trades for the day, probably. So it's just a case of just managing these trades now.
Today secured overnight financing rate remaining unchanged at 0.05%.
So these markets are opening up now, and we'll see if we get a little bit of a flush trade to the downside. The S&P is very close to all-time highs. Not really much going on with the euro dollar or the Aussie dollar, to be fair. So this trade is pretty much based in pound weakness, just to be clear. And so in our hierarchy of trades, that's what we're looking for. So the initial break to the upside, and now we're looking for that continuation trade further higher. Just let's see if we do get that little flush trade through. So we're already in those trades. You can see our entries at those levels, and you can see where our stop loss is on both of these markets as well. So we're just beginning to get that little flush trade to the downside now. Viable trading opportunity in the euro pound. So all these trades are very good to go. You've seen the technical setup on the bigger time frames, so it's just a case of not double guessing yourself too much and just look for the markets to do their thing. Let's see what sort of trade we can get out. So we're just broadly looking at that type of move. So hopefully a decent opportunity. So we've been quite patient with the pullback over the last 2 or 3 days, and now we're looking to capitalize on the momentum trade to the downside, and the opportunity is in the pound, as you can see in front of you. So we'll come back to the euro dollar, which is just trading sideways, the Aussie dollar, and we'll stay in touch. We'll just keep an eye on the S&P, but we'll certainly make these trades a little bit easier to monitor. Okay, so now we're getting a really good flush trade to the downside. This is a momentum based trade. When you get these flush trades, what you then want is kind of a natural kind of pullback opportunity, and then you want to see the next flush to the downside, and then you can remove risk on the trade. So that's the general idea. So 60. So just looking at some opportunities elsewhere, there's not a huge amount to work with. Really, the only trade because we want to try and trade higher probability trades, not just every market that's moving. So we have a hierarchy of opportunity, and certainly the market that's certainly giving us the best opportunity. Like we like gold to the upside, for example. It would be a hedge against inflation. These central banks are at odds to tell us how transitory the inflation is. And we shall see. There's a lot that goes into making that judgment. So
further comments from US administration talks as CNBC reporting comments from US Republican Senator Portman, hopeful of a positive Biden response on the infrastructure deal.
Okay, because the markets are relatively, the indice markets are relatively bullish, and Bitcoin is looking like it's finding a little bit of a bid, around 34,000 now as well. Gold would be an interesting opportunity. It'd just have to be above the current, some of the current prices. So I mean, you can see on the smaller time frames the fact that we're seeing this market significantly drift sideways for quite some time. And really, it would be a breakout. It'd be clearing this little area here. So we're looking at, I suppose, for argument's sake, kind of around the $1,800 level. We can expect a strong reversal potentially to the upside. So that's the next trade we're looking at. And gold is a hedge against inflation.
And we were getting a correction now from that earlier Washington Post piece on the timing on the infrastructure meeting towards Biden and Senator today. I was previously reported at 11 a.m., now been updated to 11:45 a.m. So now been delayed by 45 minutes to around 4:45 London time.
Okay, so these are our pound flush trades to the downside. Just keep an eye out for this little bit of consolidation down at these lows. We would certainly expect gold to probably increase in value over the next maybe 3 months. And could it make new highs? Very, very possibly, if that inflation story gets a little bit heavier. At the moment, let me bring this back up on screen. At the moment, the longer term bond yields are kind of being really supportive of these indice markets. So what will it take on the inflation side to see an uptick in this figure? That's quite a tough one still to answer. So if we start seeing a little bit more pressure on the inflation story, you're very, very likely to see the price of gold tick to the upside.
Well, that the infrastructure framework is on core and no new taxes added.
Okay, so these are our trades for the afternoon. We're looking to get into the pound dollar to the downside. As you can see, the pound dollar sort of, we had the initial flush trade to the downside. We had a little bit of a pullback and then looking to sell around that 39.20 level, and we're seeing prices just pull back, extend lower firstly, and we want to see kind of a coherent pullback anyway, because that will just give us an opportunity to mitigate risk on the trade. Same situation for the pound yen. Really strong flush trade to the downside, got a little bit of a pullback, put in our sell trade, and looking for prices to continue lower. There's also equally valid opportunity in the euro pound. We've pretty much selected the pound dollar and the pound yen, largely due to the fact that this is a momentum trade to the downside on a daily time frame as well. We're breaking below yesterday's daily low. So there's your momentum trade from last week, get your little pullback, and now we're looking to get that extension trade to the downside. Exactly the same situation for the pound yen, which is why we've cherry picked the pound dollar and the pound yen over the euro pound. So last week, big flush to the downside. This week, strong pullback, and now we're extending lows again, off the back of quite a bearish and dovish BOE news event there at 12 o'clock. So that's why we're what we quite like about these types of trading opportunities is the fact that they're quite coherent for us. Quite often over the last number of weeks, some trading opportunities have not been that coherent, and these are the directions in which we're wanting these markets to move in. What we mean by that is when we do our analysis, we want to, I suppose, understand that the fundamentals behind the market. For example, taking the pound today, we want the fundamentals are quite negative for the British pound. So the BOE are wanting to maintain their support for the economy. They want to maintain their bond buying or asset purchasing facilities at exceptionally large numbers, the largest in history. So that's been left on the table. So they're wanting to remain as accommodative as they can. And fundamentally, that's quite bearish for the British pound. And the sentiment as a result is taking a little bit of a hit to the downside. And we can see the momentum, the technicals are all sort of flushing lower. So this is when you get kind of a coherent picture. And what you're left with is a decision as to whether you buy or sell. And on this occasion, it's quite straightforward to look for that selling opportunity. And then it's just about using your trading strategy to just navigate you in and out of these markets with stop losses and technical stop losses and things like that. And there's your entry levels. So then you use your trading strategy once it all falls into place.
Infrastructure package.
What we've been seeing.
So Manchin is a key Democrat voter within the Senate, usually tipping the vote towards a bipartisan support.
What we've been seeing an awful lot is quite confusing sort of market conditions where you could have really strong fundamentals. The sentiment is a bit wishy-washy. It's kind of very difficult to kind of pinpoint any particular bias. And then you look at the charts and they're kind of reversing or sideways moving and not really giving you any bit of clarity. So market conditions like that are not great for any type of trader. They're just mixed and not that easy to work with. So what we want to try and do is try and isolate, these opportunities when they come. And today we've got an opportunity to do that. What we want to see is a sort of a natural pullback situation. So we got the flush trade to the downside. So that's the first part. We want this market to pull back, hopefully find some resistance and then extend to the downside. And what you can do is you can bring your stop loss right the way down to wherever that high might be. So we're not going to panic on the pullback. The pullback, it might extend quite high. That's really because of the nature of this news event and the fact that it is a volatile news event. We're likely to run into more sellers, but we could get, a 30, 40, 50 pip snapback very, very easily. So we need to be mindful in these markets at the moment that we're broadly just working with slightly larger stop losses perhaps than what we would ordinarily, or if we went back perhaps a year and a half ago, certainly pre-COVID, we could have maybe got into a trade like this with like a 30 pip stop loss, 25 pip, something like that. Now the sort of 50, 60 pip stop losses just to give us that extra bit of room, because the snapback could be, our bias is still to the downside. So we're comfortable in what direction we're trading. We're comfortable about identifying which markets we're going to focus on. But you can get these sort of extended snapbacks, and that's what these markets, can be like at times. So we want a nice natural pullback. Then we want markets to just, question themselves, and then we want sellers coming in to drive prices lower. And don't forget, a marketplace is nothing more than a battle between buyers and sellers. So we're constantly having sellers winning out, followed by success from buyers, and then sellers coming back in and reselling prices and pushing prices up and down accordingly. Good afternoon, Chris. Hope you're well. What do you think of the euro dollar? You got long Yeah, we were talking about that just a little while ago.
Investment comments as fund managers expect more sterling strength. 72% of respondents expect the pound to trade in the $141 to $150 range in the next 12 months.
Okay, so yeah, we were just talking about the euro dollar. That was one of the markets we were looking at last night. We're actually looking for this market to almost make a little move to the downside. Because what we've seen with this, if I can sort out my colors for you, what we've seen in this market is the majority of the price moves in this market have been bearish. The noticeable ones, they've all been bearish moves. So, as this market sort of moves sideways, you're kind of looking for that little momentum move to the downside, and eventually we got there last week. And then, of course, you get the pullback.
10 minutes time now to the top bottom of the hour.
You get the pullback opportunity.
US data as 5 reports set to be released at the bottom of the hour. Starting with the weekly initial jobless claims, a reading of 380,000 expected versus prior 412,000. A reading seen according to Reuters of 345,000 to 410,000, with continued jobless claims 3.47 million expected versus prior 3.518.
Okay, we'll come back to that in just a second. So really, what we're actually waiting for, Chris, is a sell trade, but we do need markets to trade below that 119.09 level, and I think this is a bit too thick. Okay, so we'll have to pack up in about 10 minutes. So we're identifying this level here, and we're expecting prices to just roll and take that next leg to the downside. So for us, actually, Chris, the momentum is to the downside for those reasons. So we are looking for selling opportunities. We're not looking to buy this little impulsive pullback, although it's a viable trade. There's nothing wrong with it, and we might extend higher still short term. But we've got the monthly low sitting in here at the 1985 level, so that's likely to provide a little bit of resistance. There's a lot of resistance just stacking up in at these levels. The 200 period is around that same level, the 1994 level, just higher, and that's why our short-term bias for now, and that very well might change pretty quickly, is actually to the downside, contrary to kind of the more recent price action, which is pushing higher. So you got long at the 1970, looking for the 2080 level. So you're looking for, so what you're doing is looking for the pullback trade, and if this market pulls back properly, then that's actually the level that we would anticipate this little pullback to extend to. Now it's got to work through a lot of resistance around these levels, so that's the only caveat to that. Is you got the monthly low, you got the 200 period moving average, you got the psychological level of 200. Oh, sorry, the 120 level or the 1.20 level. So there's a lot of resistance around this level. So, and I suppose we want to look at it from a probability perspective. Is that, of course, the market can move through that 120, but in our experience, what we find is we often run into that resistance. So you might see. It's a kind of a painful trade, because you might see markets squeeze lower before they make that move, if that makes sense, and it becomes a structural failure around that sort of trade. So it's a painful trade for those reasons, if that makes sense. We don't really want to be buying below major resistance, and this is what we would regard as pretty significant resistance around this kind of zone in here. So we would very rarely be looking to buy at that level with a take profit at these levels. Although I completely see the trade, I understand what you're doing. It's just got to work. And you've got a 100 period moving average up here as well at that 120.24. So you've got to. it's got to work really, really quite hard, and we don't want our trades to kind of need to work that hard. We kind of want to go with the market flow, which is, like I said, this bit of price action last week gives us a lot of information. It tells us that there is real purpose for prices to push lower. Then we get the pullback, but what we're looking for is to see if we get this next leg. That's wouldn't be too far from the truth to see something like that, and we always draw these little patterns, don't we, on these screens, so that's what we can expect. But the overall momentum, and you could even start drawing this is how, we keep saying as well quite often that all trends start from consolidation, and we saw like a month of consolidation up at these zones, but eventually we saw the confirmation that we were needing to the downside. So we saw a really major move to the downside. So has anything changed for that view to change technically, or is there anything in the fundamentals that can suggest that we're gonna just bounce straight back to these levels? We don't really have any of that thing to work with. Now, fundamentally, Europe's performing well, the vaccine's going well, reopening's going well, the number of hospitalizations and deaths are much, much lower. There's a lot of positivity. Central banks are really supportive. So there's a lot to be quite positive about. But we still have had the commitment of others last week, which is to push prices lower. And so far, all we're actually seeing is a bit of a pullback off the lows. So our next move is for prices to continue lower. Yeah, so might get out there if it rolls over. Yeah, potentially. If your entry is at 1970, I don't know where you're. So you bought it basically at the top of yesterday's candlestick, and that's really, really close to lots of resistance. So we would have always maintained you're probably likely to get that before you get that. So it's always going to be your call, really, isn't it? But I mean, basically, if prices break below the 1911, then it's probably game over to the upside for a little while, unless something changes fundamentally, or we get really explosive news about the euro and it just takes off. So something needs to change. But if everything stays as it is right now, and we get prices rolling below the 119.11, we'll certainly be looking to sell it. So we'll be looking to get into that opportunity to the downside. As prices are trading inside previous highs and lows, it's just consolidating right now. So it's looking a bit bullish right now, which might give you a little bit of optimism. But it's really for a whole day and a half or whatever now, it's just really moving sideways on a smaller time frame. So looking at it on this level, the vast majority of the price action in this market has been pretty much inside quite a tight range from 1955 to let's say 1915, should I say. So about a 30-40 pip range is really all it's what we're really talking about. And this is going back to yesterday, 2 days ago now. So for 2 days it's just been doing this little move. Yeah, we got that impulsive move to the upside followed by a pretty strong rejection, but there's your 1911. There is your pretty strong, like if I showed you that and prices fell like that, then that's the level that you'd kind of want to have your stop loss placed at that level as a very, very at a maximum, because if prices break through, you'll expect at least a short-term flush to the downside. So that would be our opinion anyway, Chris. I hope that all makes sense. And we don't want to make sort of trading too difficult, so we almost want to go with the market conditions. We kind of want to go with what the market's telling us, and it's for now to the downside, and all we're experiencing is a pullback. So not really that surprising to get a little bit of a strong pullback. This is kind of what we would want to see. So we've got gold market we'll keep a close eye on. Let's have a look at the S&P. So it's still looking quite full. We'll see how this market plays out. So really, this is our trade plan for the session. So the problem is we can fully expect a bit of a pullback in this market, potentially before we make that little move to the downside. So wherever that high becomes can become our stop loss, and we can reduce risk on the trade. Wherever that high lands, we'll move our stop loss from up at these levels based on the price action. But you want to clear this little low down here. That's the other sort of requirement that we would need to see. So flush to the downside, pullback, and then the extended move. Flush to the downside, pullback, and then the extended move. And this is what we almost practice. And then you can mitigate risk on the trade and hopefully be in a lovely position to just monitor or just focus on profit taking then. Okay, so that's our trade for today. It's a pound dollar sell trade, and it's a pound yen sell trade as well. And we're just currently experiencing a bit of a pullback in these markets. So hopefully over the next 2 or 3 hours we'll get that little rollover trade to the downside once we finish this little pullback phase. If you're wanting to get into this as an opportunity, just wait for hopefully a little bit of a consolidation, or wait for some sort of indecision candlestick at these prices, or maybe even a bit higher, and then if prices flush or roll over, then that can be the time at which you can pull the trigger. Okay then, so listen, yeah, look, hope that's useful. Hopefully we'll get a couple of good trades out of today's markets. Unfortunately, we do need to end the broadcast at this point, so please do subscribe to our channel. Give us thumbs up if you found that even remotely useful. We're here every day at 12:30, so if you want to join us, you're very welcome to do so every day. And we'll see how we get on with these pound weakness trades. So look, thanks very much for joining us as always. Do take care. We'll be back tomorrow at 12:30 from everyone here at the live trade room. We shall see you then. Take care. Bye for now.